Welcome, you're watching BQ Prime. I'm Tamanna Inamdar, and today we're talking about Motherson Sumi wires. I'm going to be speaking with the management, the CFO, and the COO will be joining me in a conversation. Now, an interesting company, an auto ancillary company, and a supplier to some of the top selling models in passenger vehicles in this country. We know that OEMs are having sort of a comeback here. You can see that in the October preview numbers as well. And Motherson Sumi wiring is along for the ride, so to speak. So before I get to the conversation, let me just quickly take you through what the numbers have been like for Q2 for the company. Revenue has been up 14.7% at 2,105 crores. EBITDA up 37.2%. Margins have also seen a healthy growth at 11.8% versus 9.9%. Reported profits have been up 33.9%, so nearly 34% at 156 crores. This is also the first quarterly revenue which has exceeded 2,000 crore rupees. So to just get a better sense of where the company is headed, Mahender Chhabra, CFO, and Anurag Gahlot, COO, are on the show with us today. Welcome to both of you, and thank you for speaking with us today on the show.
Thank you very much for inviting us on the channel.
All right, Mr. Gahlot, let me begin with your take on what has worked so far in the last financial year. You've added capacity. You've had 3 more plants. Your total's up to 26%. What has worked this time round? Is it better capacity utilization?
There has been a new plant has been put all the time for the new models coming into the business, and the ramp up of these new models are shaping up. They are going, in a better way. Other than that, there are many other activities where we can talk about the VAV and the operational improvements, as well as the recoveries from the customers. So it's a mix of all these things which we keep on working regularly, and the team is doing a lot of hard work, not onto till today, but yes, for the future also we are focusing onto that.
Okay, Mr. Chhabra, if you can fill in some details on what has led to margin improvements, especially on recoveries from your customers. Has it improved this quarter materially, and what is the reason for that?
Yeah, so as far as margins are concerned, yes, it has been a good quarter for us, and there are various factors behind that. So one is in terms of operational efficiencies. We have done a lot of work there. Like Anurag mentioned, we had put up certain plants where now the effective capacity utilization is around 70 to 80%. So we're getting more and better efficient utilization of the capacities that we had built up for our production. And likewise, we've done a lot many other initiatives, cost initiatives that we have done. So all these initiatives have led to a better margins that we see in the results today.
Yeah, just to follow up there, Mr. Chhabra, your raw material prices, from what I'm seeing in your numbers, has gone up this quarter. So we have seen copper prices stabilize overall. How do you mitigate the impact of fluctuation in raw material prices?
Yeah, so as far as raw material prices are concerned, so one of the main component is copper, for which we have got pass-through arrangement with our customers. So any change in the price of the copper is a pass-through to our customers. With some customers, it is at a lag of a quarter. With some customers, it's at a half-yearly lag. So as far as copper prices are concerned, they do not really impact our margins or raw material costs. But other than the copper price, I think raw material cost is a function of a lot many other factors as well. So which is, for example, product mix. The harnesses that we produce it for a lot many customers and for different segments. And there could be new models where the cost could be higher in the beginning, and as we move forward, the cost keeps on coming down. So it's a combination of various factors, and that's the reason we see, even though the copper price is maybe a little low, but yes, our raw material cost is slightly, let's say, slightly on the higher side compared to previous quarter.
What have been the key contributors to this?
Yeah, so like I mentioned, it's more about the product mix change. The wiring harness that we would have produced in the previous period, the mix could be different, and the cost for different wiring harness would be different. So it's mainly on account of the product mix.
So can I understand, and let me bring in Mr. Gahlot also on this, that your cost is sort of reflecting a larger trend we're seeing towards SUVs, more hybrid, EV kind of a mix, more premiumization in the OEM space. Am I getting that correct?
It's a first. There are two things to add to that. There's the OEMs are also the volumes are also seasonal and the cyclic. So it's very difficult to compare from one quarter to another quarter. So you have to see this in totality because as Mahender was saying that the product mix, whether you are supplying to PV, CV, two-wheeler, that get changed from one quarter to another. So we have to see this in totality. This you cannot pinpoint only to one point into that yes, this is the main reason of going plus or minus.
All right, but coming back to my question about your the flavor or the color of your orders and the premiumization. I mean, I saw this figure that you've been part of 23 new launches, 17 facelifts across categories and supply to 10 of the 12 top selling passenger vehicles in India. What is the kind of trend you're seeing as we see more and more, especially in PVs, the move towards SUVs? Clearly, the demand for your products increase, Mr. Gahlot.
Yes, the number, just to correct you, the numbers you are saying, that is for the last financial year. In this financial year also, we are seeing the same sort of trend. There are many launches which has been done in the Q2 by the many OEMs. And I won't go in the specific to the model to model, but I can say that we are very much available in these models, not only one OEM, it's multiple OEMs. And in the future also, we are seeing the same sort of trend where the new launches are going to happen. And we are very thankful to the customer that we are very much part of their journey also in this.
Can you add some numbers to that, Mr. Gahlot? What I have available is FY23 numbers. At least, can you give me some idea for H1? Since this is the year when, also OEMs have come back with their variants and their launches.
That will be very difficult to give you some numbers into offhand, but I can only tell you that, wherever, whichever customers are launching the products and giving to the market, we are more or less to part of their journey. But, giving exact numbers is offhand is not available with me.
Okay. Can you give me an idea of what your market share would be?
It is very, we don't go on to the market share. Obviously, we don't lose any of the businesses due to our capability. We are very much there in everything the customer asks for us, and we definitely provide to them. Yes, we don't only win the business sacrificing margins also. So it's both the things, this only I can answer you with this.
Mr. Chhabra, anything you can add to that? Because I know you're a market leader, but if you can just give me some sense on what exactly is the size of that market dominance.
Well, like Anurag mentioned, we don't really disclose the market share. We don't really track that. So that's what I would repeat.
All right. So I'm really not getting anything from there. Let me see if I get something on your CapEx plans. Since Mr. Chhabra mentioned you are at 70 to 80% of utilization, I think on an average across your facilities, is there more planned in the next fiscal or the next 12 to 15 months on CapEx? Mr. Gahlot, you want to take that first?
Yeah, this year we have taken 125 crores other than land and building because we are on the rental from the sawmill. And for all the new investment also is according to the availability of the land, and the appropriate company will invest into that. As I said, we are working very closely with the customer, and there are plans in next financial year and next to next financial year also. So we will be doing the expansion in the coming years.
Any number, plans, percentage that you can add to that?
It will be, very difficult to disclose any numbers that how many plants, because, there are few customers has given us, the indication for which we are already working. So few are already in the pipeline.
Okay. Let me just wrap by getting a sense of where you're headed. The EV story is an exciting one, but when it comes to actual demand and numbers, though the growth is impressive in volume terms, EVs are still at their nascent stage, I would say, in India. So what is your outlook on electrification, your prep for electrification and to cater to higher end OEMs, which will definitely require more wiring?
See, for EV, we are already available in all the segment. You talk about PV, CV, two-wheeler, buses, we are already there. And we are very much aligned with the customer. As customer will move on number of volumes, we are already there. If they will, ramping up to the different volumes, we are having our full preparation and will be aligning with the customer on their requirements.
Yeah. Mr. Chhabra, would you like to add any outlook for H2 in terms of, your top line, EBITDA, etc.?
Yeah, since we are suppliers to the OEM, and our business is largely dependent on the demand in the market for the automobile. So I would say it would be in line with what the demand is there in the market, and we would be like supplying to whatever OEM partners are looking at.
Well, clearly, is there any outlook that you have for demand in the OEM space? Any internal calculations, Mr. Gahlot, that you would like to share?
Yeah, see, this all depends on the numbers, because customers, you as you must have seen that customer issues of chip shortage are still not over. And they keep coming, and the changes happen. So it will be very difficult to pinpoint some number, but we are very much aligned with the customer. As they need, we are ready with the requirements.
All right. The OEM numbers have shown an interesting trend where it continues towards premiumization. Sales for, I think, two-wheelers, etc., just about picking up. And this is a business which is, sort of reflects what's happening in that space very closely. So thank you.